Buy on blue, sell on purple. Looking after the fact, one more time, this is just a Picasso. This is a Van Gogh. This is a beautiful freaking tool. Sell on purple, 4 a.m., 3 p.m., buy on blue. You went from one extreme point A to point B, and in between you pass through all the divisions of field. Divisions of field number 1, divisions of field number 2, retest of division, the middle side. They are all support and resistance points. Now, on the right side, you have the probability, and on the top side, you have the net seller, net buyer, and on the bottom side, as you know, most of you have been with me before, it is the secret weapon, the volume indicator, the same volume indicator that you had back in the days, a little bit more refined, but it is right there to bring you to the promised land without promising. So look at this morning. I know at 4 a.m. they touched the extreme, and I know it's about to turn. They start structurally, lower high, lower high, lower high, lower high. Volume indicator starts right away in the morning, goes up to resistance. All of those are my ladder resistance. Let me see if I can zoom so you can see the volume indicator even better. And the ladder moves during the day, so it's kind of a shame because you don't quite see what I saw this morning unless you come back here. So let's do it like this. Look. Replay function. This is one of the stuff that I love about this TradingView. So look, when you came this morning and you play, where is it? Yeah, here. Look what happened. It goes to the resistance. Look at the volume indicator. You eliminate the first thing. Remember, I always tell you, because then it shows the truth. It starts at resistance. Also, you start seeing some institutional net sellers coming. But most importantly, look what's going on. Let me try to zoom again. I want you to recognize the order flow even without our tools. You can kind of say, okay, so what does he see here? Because I come this morning, I sold to my guys the resistance here, right? I was long 24, sold here, and then I went short. So look, what do I see? I see that the supply is becoming stronger. Because what the lower high tells you here and here and here, by the way, this one is lower than this one. So I look at my division of thirds to sell. Either I'm going to sell here, 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 and buy here or here, right? So I know this is my buy zone. I know this is my sell zone. I just know. That's how the tools work. The divisions of thirds on both sides, and both calculator works left, right, left, right. But look, if you look just candles, forget everything. I'm just trying to help people who are not going to even bother looking at our tools, which is fine. I don't care. You know, we have only 500 licenses, so it's fine. But look, let's say I don't know, can I do this? Can I do this? Yeah, so this is cool like this. Look here. If I was someone that just used supply zones, you could see all of this becomes an area of resistance, right? And of course, I'm not going to find this thing twice. And I need the pen. The pen is on my way. And you have kind of a supply zone around here. Around the 24, right? But after that, from past data of the day, it's not too difficult to see lower high, lower high, lower high, lower high. Do you guys see that? Everybody, one by one. So you follow along. The supply is weakening at the supply zone here. And here, they buy, they buy, they buy, they buy, and finally they crack, which means this area, remember, cross, recross, retest, is retesting for the low that would prevail later on during the day. So a lot of those principles of order flow, whether it's investing, trading, swing trading, I don't care. It's very powerful, right? Cross, recross, retest, cross, recross, retest. But then here, you are left with no information. You don't know if it's going back up. You don't know if it's continuing down. You don't know. And this is where our tool comes in place, because you look at the power indicator and it's clearly showing you right there at the moment of indecision. Look, just the power indicator alone has a fantastic, amazing edge tool that has really changed my life. Look, this is going up, cross, recross, retest. Most of the traders are going to say, okay, it's breaking, I buy, 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 buy. No, this thing is still net seller, net seller. Do you guys see that? Yes or no? So this right there at that particular juncture, it was very, very helpful. Now, you don't think it's helpful. It's a $1,000 contract pattern. Because look what I'm doing now. I'm going to sell one contract. I'm going to go to 10 replay and it's game over. Eventually, it's going to follow the pattern of the volume indicator, guys. See, it's zigzag around that demand zone, but it's not really breaking, and it's game over. It's game over. The VI stayed all day, lower high, lower low. Look, the VI like never came back. So just volume indicator alone and replay alone, and looking at order flow, cross, recross, retest, lower high, cross, recross. Remember those cross, recross, retest. Like, those are very powerful. Whether it's investing in trading, you will notice those patterns replaying themselves in a very, very powerful way, right? Very, very, very powerful way. So now I'm going to show you the second dimension of everything. I'm not going to even use the tools, but then I'll show you still the automation. So here you kind of put your supply zone, your blah, blah, blah. But look, here everything is done for me. Like here, boom, everything is done for me. I know where my supply zone are. I know where my demand zones are. Yeah. I know where the divisions of third are. So it's powerful because I'm like, okay, they are going to come here for supply zone, demand zone, supply zone, volume indicator dropping, yeah, demand zone, supply zone. And so visually, you can chop couple of trades like this. Now, why is that important? Let's put it together because you are going to understand why it's super powerful, not just, oh, supply zone, demand zone, buy and do something. No, let me show you why. Let's go back to the presentation. When you do trades, look, and I completely screwed the indicator at this point. So now we have no indicator, which is fine. When you are like this, yes, you can put your supply zones and your demand zone, but it's kind of hard. You have to take the time. They are not already drawn previous to the trade happening, because you need points of contact, 3 or 4. to make that zone. How do you make that zone? You make that zone because you're here and you're like, oh, okay, Mark, this has been touching a lot of times around here. Okay, so I'll do it here. And then, Mark, there's been a lot of touches around here, right? But that's how you do your zone, otherwise you're in the dark, right? Well, the good part with the power indicators, probably power indicators, I have these zones at all time. At all time, visually, I know where they are, right? But the second thing that is very important when you trade is this, and investing as well to a certain extent, it's very important as well. So pay attention to what I'm going to tell you. I have been to some live feed and I explained this concept. Sorry, guys. Need some water. So the concept of the win-risk ratio, for surviving and not, we're going to talk about the rune gambler's calculator. So look at this. Trying to get the damn pen for the right color, but it's not getting it. Here it is. Let's say you have 10 occurrences. And let's say you have only a 40% chance of win ratio. By the way, I have news for you. Any trader that is at a 40 to 50% win ratio is a very good trader. So don't take my 62%, I think, from today as something that I do every day, because I don't. And at least I am honest to tell you that. Now, 62.5 today, right? This is not a usual win ratio, people. Most trader and good trader will be between 50, 60, 50, 60. 40, 60, sorry, 40, 60. And there's days that I make money even with 25% win ratio. Why? Because it's cash flow. How can you have a 20, and I think there was a screenshot here. Do you see here? Here, there's a screenshot. 25 win ratio. 20. That day I was a disaster. 25% win ratio. 16 trade, total disaster. Inspector Clouseau, Frenchman on fire. No discipline. But I know if I play my process and I have the occurrences of the process with the probability power indicator, eventually I'm going to nail my 3-to-1 to 4-to-1 risk ratio trade. And that's exactly what happened. Look, my average win and my average loss. This is why I finished positive. It's cash flow. Why did the guy lost 7.5 trade out of 10? But on 2.5 out of 10, he killed it at the end of the day. Bang, I nailed it from point A to point B. Buy on blue, sell on purple. I must have nailed a very good edge with over a 3-to-1 risk ratio. Now, why 3-to-1? Most people and most YouTubers and prop firms are going to tell you something that is absolutely not true. Most of them are going to say, oh, make sure you risk 1 to make 1. Like we talk about that in options with debit spread, risk 1 to make 1. Or some YouTubers or prop firms will say, risk 1 to make 2, a 2-to-1 risk ratio. But if you look here at the 2-to-1 risk ratio, you barely pay for commissions. It means you barely pay for commissions, guys. You're a break-even trader at 2-to-1. People don't know that. You got to have 3-to-1 risk ratio. So now, how do we do that? And by the way, I'm going to give you another research about day trading and risk of rune. And by the way, I have a calculator that I had put somewhere for you. But of course, this calculator doesn't want to show. Here, the risk of rune calculator. Risk of rune. Everything is this. It's all about mathematics and risk management. And by the way, I urge you, your homework for between today and tomorrow and next week when I see you for the automation is to really watch the risk management class in your Think Wealth Differently school group, right? So if you are not there, get here because it's very exclusive membership. I review like this guy, I don't know who it is. He's not coming in. And I'm reaccepting some of the people that I know. And this is really great. You go here, you have your classroom for free. You have part one, part two of your risk management, support and resistance, rule of thumb, asymmetrical risk, calendar of the event with the risk, with the link of where we have events, the leaderboard, the members, and the community. We can share trades here on the general discussions. We can share options here. So in terms, it's like a Facebook on fire. It's really, really good. So get into this. Let me give you the link if you have not done so. It's really, really good. And this is where you'll get the risk management master class from 2023, which was a paid class for a lot of you guys. So now, if you go to the risk of ruin calculator, you can play with it. And you'll see if you can sustain with your statistics that are here from TradingView. You know, your average win, your average loss, all your stats that you have here, right? You can see if you would sustain or not. Like for instance, would I sustain here? We can make the exercise just for play. 25.75. So let me write it down so we don't spend Christmas on all of the stats. 25.75. My average win is 578. My average loss is 101. Okay, let's go. Let's see if it's a sustainable possibility. Win rate, 25%. Lose rate, well, the opposite, which is 75. Average win, 578. Average loss, 101. Max at risk, I will. In prop firms, the prop firms gives you 1%. So let's say you have a $50,000 account on the prop firms and you try to win your challenge or your combine for $50,000. 1% is going to be 500. I like to risk half or a third of that. So let's say 250. So let's say half of a percent. So 0.5%. Trading capital, let's say that I do a combine, 50,000. And calculate. Let's see if I go anywhere with this. My risk of being ruined, losing everything, is 68%. So you see, even though I made money that day, you cannot run a business like this. Does that make sense? Give me a quick yes, no. So you can play with some of the stats here, but the point of the matter is this. You really want to be at 40 to 60%, and it's going to be very hard. But the most important is the average win versus your average loss, is the cash flow. Okay? So it's all about stats. It's all about how you win the challenges. And the good thing, if you do, let's say you come with us, we train you, we help you. It's not all I do. All I do, most of what I put my money in is long-term investing and swing trading. So if that venture doesn't work and you lost $300 in 3 months and a little bit of time, I know for sure you will never be a day trader, right? But at least you give it 3 months. Some people give it 2 years. Like Travis has been working on it 2 years nonstop, diligently, right? And that's the way. If you really want, that's really what you want in life. So let me show you another stat of the risk of ruin, because it's going to really resonate with a lot of stuff that we are doing. And we are going to go back to the charts, the power indicators, and you'll see how they are helpful. So if you do a 1-to-1 ratio and you have a 50% win ratio, you are going to blow up everything. But look here, if you structure a trade with 3-to-1, 4-to-1, 5-to-1, and your win ratio is at 30%, which is where most people are going to be, that means you cannot afford to do less than 3-to-1, because over time, your risk of blowing everything is huge. Is that awesome information, people? Yes or no? Is that like really like stuff people don't know, people don't think? But there is research on this stuff. There's like real research. There is like research, guys. There is like mathematical formula for you to survive day trading, be profitable in day trading. You know, I didn't spend 30 years of my life just winging it. I mean, I am really into this, right? And of course, another thing I'll teach you that is very important is do not take big sizes. And I'll explain during the mastery and when you are with us in the group live every day. This you don't need big size because look here you have a lot of stress. The guy who takes big size has a lot of stress. The guy who takes a small size, look, he comes break even before everybody. And then when the trade goes your way, then you go bigger and bigger. So essentially you add to your winner. That's a very important concept. I wish I had known earlier, believe me. It would have saved me a lot of money, right? So now let's go back to charts. And all those concepts I'm sharing with you applied. Everything that we talked tonight, even it could be on the 2-minute charts, 5-minute, supply zone, demand zones, support, resistance, net seller, net buyer, signals, probability, it's all connected, right? All of this is connected also is available and applicable for my cryptos. Like when I count on cryptos, we over double, you know. So I want to show you this stuff, like when I have Ethereum, Bitcoin, it applies on everything, right? So let's go to charts one more time. When you place a trade and you have your supply and demand zones like this, your goal now that I showed you some very powerful concept is what? You need to at least find trades that are 3-to-1. So if this is a supply zone, a demand zone, you want to make sure that if you are going to trade at 530, if you risk 1, so let's say the stop loss should be at the bottom of here, which is roughly at 0.9, so 4 points. If you are going to risk this 4 points, you need to make sure that you have 12 points on the upside, which is not easy on ES. It's not easy on ES, guys, to do that. Because look here, if I apply what I need, that means long position, I want to get somewhere here long. My stop loss needs to be 3-to-1. So of course, some people are going to say, oh, Mark, I'm going to do a 3-to-1 ratio here. Well, it's not realistic. That means you enter here at 13, your stop loss should be, say at 0.08, 0.9 here. So we can reduce this one now to, let's say, a 3-to-1. And look, now you have your 3-to-1 perfectly. Do you see everybody? Yes or no? Do you see that? So now if I right click, I say, sorry, I left click, I can send the order through the broker, the 400 accounts or Tradeovate, account size, risk, entry price, tick price, boom, okay, boom, it's done. It goes, my upside is taken care of, my downside is taken care of, my decision-making process is very clean. Is it powerful, everybody? What have we learned today? A lot of very powerful things. We've learned 3-to-1 risk ratio is key. Less trading decisions because your brain goes like this, right? We've learned about order flow, look at the order flow. Do your structure, support, resistance, supply, and demand. which we have everything automated with our probability power indicator. I'm showing you the concept with no indicator, so you can replicate for yourself. And the importance of the 3-to-1 ratio, important of using other people's money. If you're going to do day trading, 90% of the day trader lose money, so you don't want to use your own money if possible.